We don't know what the cycle peak will look like, so here's my recommended course of action for most people, and maybe even something I'll do this time around. When it will be, we are unsure. We are aware that a completion this year would be incredibly premature. In the months following a U.S. presidential election, there is typically a ferocious surge leading up to the year's conclusion. So, my recommendation is to think about it in terms of time rather than money. Add another third to the budget for lifestyle chips, to avoid being trapped in another harsh crypto winter, which will surely be marked by dramatic 80 to 90% drawdowns. Many investors are wondering whether it is appropriate to begin collecting profits. There is still plenty of time for crypto asset prices to rise before the cycle peaks in 2025, as the consensus is that we are now moving from crypto spring to crypto summer. Depending on the source, the cycle could continue for another 12 to 18 months. Profits must be taken within that time frame. Ex-Goldman Sachs executive uses his first Bitcoin purchase as an example, saying he lost out on a lot of potential profit because he sold his holdings at the wrong time. While Powell concedes that market timing may have its uses, he thinks it's wiser to ride the wave to the end of 2030 when the world will be transformed by the impending technological revolution. Let's get into the psychology of profit-taking and cycles that we are aware of. Since it will differ for each person, which is crucial, let's simply discuss it collectively. Since everyone reset their interest rates to zero in 2008 and then made all the government debts in roughly 4 to 5 years, the debt refinancing cycle occurs every 4 years, according to this everything code thesis that I've built. This explains why crypto is so cyclical. Produce this never-ending loop, which is identical to the cycles of Bitcoin's halving and the US presidential elections. This leaves us with these cycles. Additionally, crypto is the world's top-performing asset in each of the 3 years: spring, summer, and fall. In comparison, macro is the best-performing asset in the spring, summer, and fall. The 4th year is the most difficult. What hurts individuals the most is the very worst. And the question of how to handle this is a popular one. So here is my initial thought. First, what are you hoping to achieve? When it comes to investing, how long do you have to wait? This space will go from, say, $2.5 trillion now to, say, 10 to 15 trillion by the conclusion of this cycle, depending on the size of this cycle, to, say, 100 trillion by 2032, assuming you're saying this is my large macro thesis. Here we have the most massive macro trend in the history of wealth creation. It remains right before our eyes. Sure, the returns were sky high in the beginning, but they're still sky high now. So we would prefer not to mess things up. What we aim to do is record that. So many people wonder if it's worth it to trade out during the macro crypto decline, sell at the high, and then buy at the bottom to avoid the 75% drawdowns. So I would gladly accept that down cycle and add it to my savings. For any of you who aren't in immediate need of the money, anticipate a reduction of 80%. Perhaps this time it's less. Perhaps it's more. At this point, Solana had fallen 97%. Last time, ETH was 97% lower. Take advantage of it, since for large coins alone, every time you buy at the bottom, you're going to get 10, 20, or even 50 times your initial investment. It significantly increases one's fortune. Consider the first crypto spring and picture Solana lasting 10 times longer. Neither summer nor autumn has arrived just yet. Right now, we're just entering summer. Following that path will undoubtedly increase your earnings if you have a long-term perspective. Prepare yourself financially for the sell-off by purchasing it. At this very moment, we may be experiencing our final chance to invest in the market. So if you have the means to do so, or if you can wait, this is your final opportunity. Brutterson, stick things get a little wild after this as we enter the banana zone. It will then be unsellable. In the event of a bear market, your entry levels will be underwater. You have no business being at these levels, even if it isn't considerably. In these last stages, it's best to cram as much as possible. I understand. Hold off until 2026 and then say, yeah, I can't believe I can get more and compound more wealth. That's exactly what long-term thinkers should do. Have some money on hand for that. Get yourself prepared. A person should be the one to assert, I've got money when everyone else is running scared. Another option is that many of you would prefer to remove all possibilities from consideration. I would rather not face the anxiety that comes with declining markets. Okay with me as well. Having a firm grasp of one's own psyche and habits of conduct is essential. Not sure how to time the peak, though. It ought to be at my workplace between the summer and winter of 2025, as far as I can tell. Most people should follow this course that I've proposed. Since the shape of the cycle peak is unknown, I may take matters into my own hands this time around. When it will be, We are unsure. We are aware that a completion this year would be incredibly premature. In the months following a U.S. presidential election, there is typically a ferocious surge leading up to the year's conclusion. Use that, is my recommendation. Time rather than money, and remove perhaps a third of the available budget for lifestyle chips. Then you may use that additional money towards a down payment on a car or a house, or whatever it is you want to buy if you're fortunate, to protect your lifestyle and the things that are important to you. Withdraw some funds from crypto land and deposit them into fiat world where you currently reside. Well, you've certainly alleviated a lot of stress now. You've completed it in terms of time rather than money, so when the year comes to a close, I'll cut you a third. The price is not particularly important to me. Quite a bit will be up. Because of this, I've decided to remove it. Plus, I've taken precautions to make 2025 a more strategic run for my life. In 2025, you can go ahead and spend the remaining 2/3 of your money as you like. If you want to take more time off, you can. Announce it in the summer. After you've reduced the risks to your lifestyle, you might not need to do any more than run the remainder. That method is the one I like. However, my usual practice is to slash costs by an additional third in the event of a major pump 2013 to 2017. In the event that it is stunted, the outcome will be insignificant. You can now buy some cash after you've taken a third off and secured your lifestyle. You can use that money to buy the dip, or as I mentioned before, for your lifestyle chips. Now you're prepared for the possibility that it will end early. Now that you've removed your financial stake, you're indifferent, but you're still playing. Being a part of it is the tendency that is secular. I value that above all else. You can put some of the extra money you take off into the lifestyle chips bank if things truly get out of hand. In any case, you're still in a position, in my opinion, you're more likely to make less than ideal decisions in the absence of a secular market position. So there you have it. You might not use the third, but you could use half. The point is moot. My point is that you shouldn't worry about being perfect. When you factor in different time zones, you have to figure out how much of a safety net lifestyle chips provide. This pattern is too crucial to mess up, in my opinion, so that's my top recommendation. Because I have some lifestyle-related goals I want to achieve this time, I think the third off plan will work best for me. The previous time, I was in the wrong. I'm so content with just purchasing the dip. This tendency is here to stay, so I will definitely purchase the dip in 2026. Keep in mind that the range is 2.5-10-15 trillion. 15 represents the pump. From 10 trillion to 100 trillion, it should be typical. Yes, that is the game we are engaging in. Make cyclicality your ally. The passage of time brings with it opportunities that you should take advantage of. On this Sunday, May 12th, as I speak to you, we are undergoing a transformation. We are currently in the midst of a transformation that will lead us into crypto summer. In the typical seasonal cycle, it occurs in June and July, after which things go crazy. Obviously, there will be course corrections, and sometimes quite severe ones. Although 30% to 40% is possible, it typically moves into the banana zone after this. At that point, you must exercise caution so as not to go completely bonkers and ruin this by investing in things you shouldn't, such as buying all the coins on the market just because they're going up in value. Consider this a game with a longer time horizon. Stick to the large coin secular trend and invest a little, and everything else you'll be rich. That concludes the main points of today's cryptocurrency news. Keep checking back for more cryptocurrency news, analysis, and perspectives. Post your opinions in the space provided. Please subscribe to our channel and give this video a thumbs up if you enjoyed it.